All right, UNFCU, we draw inspiration from our sponsor, the United Nations, and that community's tireless work and their dedication to protecting the planet now and for future generations. Our corporate social responsibility is therefore guided by the UN's Sustainable Development Goals, or SDGs. You see everybody with these little pins. It doesn't mean that we're Trivial Pursuit champions. This represents the colorful wheel of Sustainable Development Goals you can see enumerated at the back of the room today. During New York Climate Week, the UN Secretary General stated that the goals would need to be turbocharged for the world to have a chance of making them by 2030. Now, each of us is key to making sure that turbocharge actually happens. Addressing climate change is in our hands. With the SDGs as our context, it's my great pleasure now to introduce our keynote speaker for the day, Dr. Pushpam Kumar, Chief Environmental Economist and Senior Economic Advisor for the United Nations Environment Program, or UNEP. And Dr. Kumar is going to discuss making nature count in banking and finance. A little bit about Dr. Kumar and his very impressive resume. At UNEP, Dr. Kumar leads work on pollution and human capital, nature-based solutions, inclusive wealth, the UN Sustainable Development Goals, and nature's human development nexus. He serves as report director for economics of land degradation in Africa and Asia, coordinates the Inclusive Wealth Report, and provides analytical approaches for reports on planetary and human health. His work on the valuation and accounting of natural capital for the green economy culminated in the passing of a resolution on natural capital at the UN Environment Assembly's second session to the UN Economic and Social Council and General Assembly. Welcome to the stage. Dr. Kumar was closely associated with the 2007 Nobel Peace Prize winning report from the Intergovernmental Panel on Climate Change. He holds the position of honorary research scientist at the Earth Institute of Columbia University in New York, regularly publishes in peer-reviewed journals, and has written or edited 8 books on nature-based economic solutions. But what's he done for me lately? And we're very thankful to UNEP for its ongoing support of our work and active participation at our UIS events. Ladies and gentlemen, Dr. Pushpam Kumar.
Thank you, Patrick. Very happy to be here. Thank you, Elizabeth, for having me. It's always a pleasure to interact with people who come from finance, insurance, lending and borrowing practices professionals. So you are the key when we talk about sustainability and implementation of all those targets, goals, and indicators which the world talks about it. So what I'm going to do, I would like to give you where we are in terms of what we call the planetary crisis. It's not a nice idea to start the talk with crisis, but that is where we are. And what is the role of finance and largely the economic sector? What they can do, what you can do, how you can help. So when we talk about planetary crisis, we will take 3 things because there are a lot of issues under planetary crisis. We will take 3 issues. One is climate change. And of course, as you know, many of our colleagues and friends and all the ministers and head of states, head of financial institutions, top CEOs, opinion makers, they are meeting in Dubai right now when we are here in this room. The meeting starts from up tomorrow. You can have views about this, but everybody coming under the one roof and talking about climate change, thinking about what interventions we should design and implement to halt the problem known as temperature rise. As we have seen, we are nowhere near the 1.5 degrees Celsius as we thought we will be during Paris Summit in 2015. I mean, in fact, we need 40% more investment in order to control greenhouse gas emissions by 2040. It's a huge challenge. That is climate. Biodiversity and nature. We talk about nature positive economy, but IPBES, Intergovernmental Panel on Climate Change, Ecosystem and Biodiversity, IPBES, they have given us the assessment that we are facing the challenge where 1 million species are under the risk of extinction. Now, you will say, why they are important? They are important because our bank, our economy, our insurance, our finance is embedded in nature. And that's why. So it is not a corporate social responsibility business. No, nature is part of the risk management strategy. It can't be something outside. And the third part is pollution, air, all the chemicals. And we know that every year, 7 million people die due to air pollution alone, costing 9% of global GDP. You know that last week we crossed the global GDP of $100 trillion. Last week, $100 trillion. But a lot of this GDP is something you won't like to see. The health impacts, climate change associated health impacts, pollution associated health impacts, and lots of inimical impacts on nature ecosystems are not accounted in this GDP. So these are the three: pollution, biodiversity, and climate is. Now, when we talk about these three things, immediately we come to I'm not going to talk about the science part, that is there. And you can see that. Where is the investment opportunities and where are the gaps? And how a union like this, the credit union, other financial institutions can chip in and see that what world leaders are talking can be addressed, if not fully, partially. So you have various conventions. I talked about IPBES, you have IPCC. They are the scientific bodies providing support to conference of parties and secretariat, like COP28 is being done by UNFCCC. Then you have CMS, you have many other conventions. They bring the hard science, but the core of those science is people's prosperity and well-being. And that's why finance and economics become so important. So this is from our emission gap report, which was launched a few weeks back. And there was a thinking earlier that some incremental change would bring the agenda on the track, especially of climate change. Now people have realized incremental is not an option. You have to go all out effort, economy-wide transformation to avoid any collapse which otherwise might happen if we are not limiting ourselves to 1.5 degrees Celsius. I mean, when in 2023, in the month of November, when we are talking about climate change, we don't need to talk about it. We see what is happening around. You have the frequency of the heat waves, the drought, the flood, infrastructure problems, every part of the world. It's not only in sub-Saharan Africa or South Asia or Amazonia. It is happening right here. As you know that various departments in the US, they have ordered 1 billion investment on planting of the tree to combat the heat waves. That is in black and white. So no more it is a problem of somewhere, let's say in DRC Congo or Sudan or some part of India or China. No, that is not the case anymore. It is happening in every part of the world. That is climate change. So incremental change is not the option all out. Second, in fact, various sectors have been estimated that in agriculture, in industry, in construction, in infrastructure expansion, how much is the requirement? How much is the investment right now? I'm talking about the green investment. And what is the gap? Basically, the thumb rule is in every sector, the gap is huge. Of course, part of the money is coming from the government. Part of the money is coming through the blended finance, and part of the money is from private sector. The problem with private sector is unless we incentivize, unless the return is identified, quantified, and monetized, the private sector, because their time horizon is short, they will be a little reluctant to pump their investment into that sector. So the incentive structure has to be in place in very simple and clear-cut terms. And only then this problem or this challenge can convert or can translate into opportunities. So biodiversity, you can see the hot spots in the first diagram, the global maps. Okay, there are the logos. I mean, the red and orange tells you they are alarming and we are losing it. Forest globally is on decline, but I will take it, instead of talking about the biophysical data on forest and the biodiversity, on the right-hand side, what we have done, this is from UNEP, that for 163 countries, 163, since 1992 to 2019, we have estimated inclusive wealth. What is inclusive wealth? So it is produced capital, building, equipment, machine, so on and so forth, which GDP gives you, human capital, human health, cumulative wisdom, education, a skill, and the productive labor force, which is 15, 16 years of age to 62 years of age, people who are willing to work and are not handicapped. That is workforce. So that is human capital. And then you have natural capital, topsoil, forest, fish stock, atmospheric visibility, groundwater, surface water. So, but they are physical. We have estimated their value. I don't know how excited you will be that you see the GDP per capita and GDP inclusive wealth. The rate of growth of GDP per capita is much higher than GDP, per capita inclusive wealth. So what is happening here? We are mixing income with wealth. That is very bad economics. When we die, we pass the wealth to our next generation. We don't pass income. And you are the experts here. Income is the flow of goods and services produced as a result of putting effort on the various types of stocks of capital. So capital is a stock, income is flow. We are mixing the two. We are eating our stock of capitals and thinking we are doing good. We are not doing good. We are compromising the prospect of future generations. You can say that, oh, some part of the capital can be substituted. So maybe you can see the per capita natural capital is on decline, the green line in the bottom here. That is continuously on decline. Again, this is average. I'm not saying that for some countries, for example, Japan is a very good example where forest has gone up. And many parts of natural capital has gone up, but that is not the situation for large part of the world. For average 163 countries, natural capital per capita is on decline. And of course, produced capital is on rise. Human capital is also on rise because of the better health facilities, better schooling, better college education, so on and so forth. But natural capital is on decline. You can say that produced capital can substitute for natural capital, not infinitely. The experiences of last 100 years has shown that this is, technology and innovation does many good things, but they cannot substitute natural capital forever infinitely. So two things. Number one, income should not be mixed with the wealth. And that is what here we are doing globally. Second, there are trade-offs. It is possible that you can achieve higher growth rate, but if you see for last 175 years, at least since 1950, the per capita output global has gone up by 5 times. Population has gone 3 times. Output has gone 15 times. So per capita output is, but in that process, you see the climate, we have lost half mangroves. We have lost, I mean, you see the amount of plastics. By 2030, we will have more plastic in the coast or in the ocean than the fish. So if you see some of the global scenarios, they might not be frightening, but they are really, really serious if we think about our children, our grandchildren. And not only that, I mean, in the all fairness and ethical considerations, thinking about future generation or next generation is not something philanthropic. It is something you have moral duty and responsibility to think about it. Now, with that in mind, there are estimates that biodiversity and nature investment opportunities, how much they exist. You will find in all categories, there is a huge gap. Now, what can we do about it? And of course, we have to talk about responsible banking, sustainable consumption and production. We have to have risk management strategy in place for credit union too, in place. And as I said, nature, biodiversity, climate, and pollution, they are not corporate social responsibility. They are very much a risk, a threat, as you have seen World Economic Forum and business corporations, all of them, they have identified climate and nature are the first 2 major risks for the business. So you have to understand the risk in the governance structure, in the board meeting, in the daily operations. That risk must be identified. You have to disclose the risk and take government and other civil society in confidence that this is your risk strategy, whether this is good enough. But of course, we need to have proper indicators. We should have different scenarios, how the world, how the business would look like in 2030, 2035, maybe 2050. If 2050 you think is too far, 2030 most certainly. And there are estimates on climate, on land. I think it's a very serious projections. It is alarming. So for corporate, I mean, there is a UNEP FI finance initiative. They try to engage. There's a big network of bankers and the credit union, again, global, not only for North America. And of course, North American credit unions and the banks are the members. They have joined and they have set a target for themselves that if we move towards net zero, you know, every country more or less, now they have declared that, okay, by 2030, they will be net zero. Basically that their net emission will be zero. You have for US, you have for UK, France, Germany, Japan, Australia, most of these guys, even China or India or Indonesia, Turkey, Morocco, Nigeria, all these guys have come out with net zero target. Of course, the timing is different and that could be a problem. But how under that different net zero, what are the risks for the insurance and banking industry? That has to be identified. You might like to know what are the indicators. You might like to know what are the different scenarios so that you can organize yourself better. So that is the whole idea behind UNEP FI. Of course, we have to support, and the credit union should not be isolated from these aspirations of the global, you know, the community. The new architecture of finance where debt restructuring can release funds for climate, nature, and pollution. You might have seen that in last, at least this year, in fact, this year is ending, the entire focus is on debt management now, because at least the countries in the South, and also here, they have realized that $100 billion in climate finance is not going to come for different regions. So, okay, can we release some money from the debt? And that's why they are asking the World Bank, Asian Development Bank, African Development Bank, and other multilateral trust funds that let us think about restructuring of debt. So that is going to happen. President Macron asked for a summit 2 months back. Last week, a lot of world leaders met in Berlin, and in Dubai too, they will discuss about this. Of course, they are going to streamline loss and damage. What is the estimate on loss and damage? Who will, but the kind of money is being asked. I'm not saying they are unreasonable, but it might be difficult to see that kind of money flowing. So we have to manage our expectations. So that is the new architect, which is going to emerge, certainly. Second is implementing and investing in agreed global environmental framework with large co-benefits. See, the climate is not only for the climate. In fact, there are studies in science that what we saw in the pandemic, that unwanted pathogens came from the animals to Homo sapiens, that was partly due to climate change and the habitat fragmentations. And that was, what scientists say, that we have been getting the warning, we didn't hear, we didn't listen to, and that was not the last pandemic. It could happen again. There's no need to follow the Malthusian ghost, and I don't want to be a harbinger of bad news, but we have to manage these issues, otherwise we will have problem. So there are core benefits of managing it. Upscaling investments in climate, biodiversity, and pollution through integration of triple planetary crisis in national planning and development policies. That is very generic, but bank has and the unions have a role to play there. Net zero, biodiversity, and pollution into the way the key value chains, different sectors like textiles, mining, building and constructions, agriculture, electronics, etc., are the priority area. In these areas, if investment goes, we have to be extra careful that what are the environmental safeguards your investment might temper with. You can work with the government and see in which direction government is going here too. And there's a lot of things the White House and different departments here in US, they have given the guidelines recently in last 3-4 months. So one has to keep track of that. Net zero, nature positive economy is something, it is not going away. You have to operate within that larger constraints, if you want to call them the constraints, but you have to work within that contours of the constraints which nations are going to impose, and which is for good, by the way. There could be some trade-off in the short to medium run, but in the larger run, I think this has a lot of merit. Finally, we need to change the grammar of economics. Progress, sustainability cannot be measured through GDP alone. And that's why OSTP, Office of Science, Technology and Policy in this country of White House, they have come out with the guidance manual, how to do accounting of growth and natural capital. 2 years back, for HM Treasury in UK, there was a Dasgupta Review Committee, and they also said GDP indicator is not great. And GDP was never meant to measure the sustainability and progress. So next year in September, in the General Assembly in New York, there will be Summit of the Future, and they are also going to come out with a detailed roadmap how to move what they call beyond GDP. And GDP will remain, but we have to strengthen the GDP, maybe inclusive wealth, comprehensive wealth. Sometimes we have to supplement that GDP. Otherwise, we will have a false sense of progress and prosperity, and that does not augur well. I know I will stop here, Patrick. I know this is a very generic, maybe more macro kind of things, but I will be very happy to take questions from you if you have any specific thing to ask, and also people from online if they are there.
I have one that by virtue of having the lav, I think I get the privilege. I'm just not going to let you tell me that there's going to be more plastic in the oceans than fish, and the next pandemic is coming, and GDP is the wrong measure. Before we let you go, please tell me what makes you hopeful for the future.
Many things. My idea was not to intimidate people that there will be more plastic in the ocean than the fish, and climate, all the frequency of heat waves will increase, or GDP is bad. Each of the, GDP is very, and being a macroeconomist myself, GDP does many, many good things. But neither J.R. Hicks nor Keynes are not Ruggles and Ruggles couple in USA when they designed, or Vasily Leontief in 1929, when they came out with GDP measurement, they had no illusion or no exalted self that this GDP will measure progress and sustainability. If you really want, for tax planning, great. For macroeconomic modeling, wonderful. For fiscal monetary policy, great. Sustainability and well-being, probably not. So we need to strengthen this. So it was not in a negative sense, but alerting that, look, the way we are doing things is not perfect. Plastic, yes, that is what the science says. Intergovernmental panel, it's not one scientist, not R&D of one company who might have some ulterior motive. Here you have thousands and thousands of scientists, years and years of research and assessment, and then they tell you what is going to happen. So yes, there is a threat, but as you also know, that there has been very good news. Last year, there has been a convention on plastics led by US itself. And all the countries have ratified that, yes, they will ban the plastic in a gradual manner. I'm not saying that it will happen next day. It is not easy. There are many challenges in this. We are in the post-pandemic era. People have lost jobs. I'm not talking about this part of the world. In many parts of the world, recession is the reality. Wage rate has stabilized. There are many pension funds are not being used the way it should be. Productivity remains the challenge. So I'm fully aware of those challenges. But at the same time, this biophysical constraints will apply, whether it is climate, nature, plastic, chemicals. Do you know that the chemical industries, I'm not putting any particular chemical firm, I won't name, the kind of production we are doing of chemicals, they are killing 2 million people every year. 2 million. This is science. This is the public health experts who are saying this. So idea is not to give a bad news or pessimistic projections, but to gear ourselves better, for better risk management, for get ready, be prepared, and have proper strategy in place to handle. 20 years back, how many business firms were talking about this issue? You had one sale somewhere in the corner called corporate social responsibility, CSR. You do ask one expert, he comes, gives a report, you do the media event, and you say, oh, we are green, and you maximize the share value or goodwill. That era has gone. Now,
our business, our economy is embedded in nature. Without them, we can't do. So that sense has to come. And by the way, this was 200 years back. This was happening. David Ricardo, when he was talking about land, who was David Ricardo? He was a share market broker working in London, but he talks about land, the rent, degradation of land. So it was John Stuart Mill. There are a lot of people who, French physiocrats, they were talking about it. Somewhere in 50s and 60s and 40s, we lost. Part of the reason was that in the World War, second, the way the economy was, devastated, people didn't think about it, and it was the right thing to think then. But now this is the time to think about it. And bank, insurance, and credit union, they have a big role to play here. So I don't know whether I'm answering your question, but no way, I'm not giving the bad news, but that is what the science says.
We have to be clear-eyed, but the message I heard is be prepared because the future starts now. All right, everybody, Dr. Pushpam Kumar.